Welcome again, everyone, and thank you very much for joining us today for a presentation by Jill Dymtrow with Compliance Technologies International. I am Lauren Skinner-Johnson, and I will be your moderator for today's event. Before we get started, I'd like to cover a couple of housekeeping items. First of all, to facilitate efficiency and respect everyone's time, everyone will be on mute for the duration of the event. So if at any time during the presentation you do have a question, please type it in either the Q&A or the chat box in the panel on the right-hand side of your screen. We'll take some time at the end of the event to review all of the questions and attempt to answer as many as we can live today, but we do apologize in advance if we're unable to get to your specific questions. Now, before I introduce our speaker for today, I'd like to get a better understanding of how 1042-S reporting affects our audience through a couple of polling questions. The first question is, how many 1042-S forms are you going to file this year? A, 0 to 50, B, 50 to 200, C, 200 to 500, or D, 500 or more. I'll give you just a minute to answer that question. Thank you very much. We do have one other polling question that we'd like to run by you in just a moment. The second question is, with the new 1042-S reporting requirements, do you see your 1042-S reporting requirements increasing by 2 times, 5 times, 10 times, or I don't know? Again, I'll give you just a moment to answer that question. Great. Thank you for your participation in today's poll. And without further ado, I'm very pleased to introduce Jill Dymtrow. Jill is a Vice President at Compliance Technologies International. She joined CTI in 2007 as it was being established by partners in the law firm of Burt, Staples, and Maynard. She has 10 years of experience working with U.S. financial institutions, multinational corporations, and qualified intermediaries, managing their day-to-day compliance obligations under the IRS Section 1441 and 3406 rules. Prior to joining CTI, Ms. Dymtrow specialized in information reporting and withholding as a manager with PricewaterhouseCoopers. Her work has involved large global financial institutions as well as technology, energy, pharmaceutical, and biotech companies. With that, I'd like to welcome Jill.
Hi, thank you for the introduction. All right, so today we're going to discuss completing Forms 1042-S and 1042. There's been, I wouldn't say a ton of changes in these forms, except for the fact that there's been a lot more attention paid to them and the accuracy with which they're completed in the past few years. So because of this attention, we really want to focus on getting these done correctly and making sure we know exactly what needs to go on each of these forms. So I'll start with the 1441 reporting requirement for Forms 1042-S. So a Form 1042-S is an information return report. It's issued to non-U.S. persons, or you might hear people refer to them as NRAs, non-resident aliens. And it's the equivalent basically of a Form 1099 that's issued to U.S. persons. So whereas you make a payment of income to a U.S. person, you're going to give them a 1099 MISC int div. Basically, the 1042S is a MISC int div and everything else all combined into one. So outside of a partnership that's making distributions of effectively connected income, you're going to report all payments made to foreign persons of U.S. source FDAP income on a Form 1042S. So you're going to issue them this form whether or not you withheld any tax from the payment. And of course you need to look into your payments to make sure that they're the right type of payments to go on this form. We're gonna cover that in another slide. So Forms 1042S have been around for a while, and people have been completing them and filling them out and sending them to the IRS for many years now. Well, last summer, Stuart Mann at the IRS got up during a conference and said, hey, by the way, we're really looking at these now. So whereas before, we'd only really look at them if maybe an auditor came to your site or, you know, if it got kind of randomly reviewed. But now we've built a system that can automatically review the face of this form, and it's going to know if you didn't do it right. So there are certain code combinations that don't work, and certain numbers that have to be in certain boxes when reduced rates of withholding are given. And if you've been doing Forms 1042S for the last 10 years and you haven't gotten any notices, it doesn't mean you've been doing them right. You really need to figure out how to do them right this year, because if not, we're going to let you know. So he said that last summer, and of course the IRS will never tell you that they're not looking at things until they tell you that they're going to start looking at things. And that's what happened. So I haven't seen a rush of notices from tax forms that have been completed at the end of 2010, but apparently it's out there. So we really need to start paying attention to how these things are completed and how correctly they're filled out. So the first step to making sure you're doing a Form 1042S correctly is to make sure you know what you're paying. And it's really important to make that determination at the time of payment. I can't tell you how many forms I get at the end of the year. I do a lot of 1042S processing, so I get a lot of information at the end of the year where people have reported a certain type of income, or they think this certain type of income is supposed to go on the form, and they did a percentage of withholding, and they gave a treaty rate and everything, and they got the income totally wrong. So that income for that country didn't even have a tax treaty available, so they've under-withheld. They might not have made the right determination at the time of payment, so now they're kind of stuck at the end of the year. The payment went out the door to the vendor, maybe without any tax attached, and now they've got an exposure that they need to analyze because they didn't make the determination up front before the money went out the door. So it's really essential. I know it gets really difficult to put into your process when you get many invoices to pay and get out, and maybe automated to get money out the door to your vendors, but it's really important before money gets out the door that you have some sort of expectation of exactly what the character of that income is. All right, so the second step is to know who you're paying. So you're going to need to apply a correct recipient code on the Form 1042S. In order to do that, you're going to need to know who your beneficial owner is. For the most part, it's kind of straightforward when you're dealing with things like companies who are providing you services, or even individuals who are providing you services. But you'll see in certain situations, the beneficial owner is not the actual name of the person you're paying. So when you're paying maybe a foreign partnership or a trust, a lot of times the partnership or trust isn't the actual owner of the income, it's the underlying owners. So always be aware, especially when you're making payments to partnerships, which does happen occasionally, that instead of reporting that you made a payment to a partnership, you're going to need to report each of those partners that was allocated a percentage of the income that you paid to the partnership. Now, determining that with documentation up front before payment is made is really essential, because you're going to have to analyze the the nationality and the tax treaty eligibility of each of those partners before you make a payment. And that really is going to throw a wrench into your reporting unless people have filed a check-the-box election to be treated as a corporation for U.S. tax purposes. Now, we do see that a lot, and if they have done that, then obviously you're going to code them as a corporation, even though the name might say LP, and it's always helpful to collect that, that certification that they made to the IRS or the proof that the IRS has accepted it, because otherwise on a tax form you're going to have a conflict between the name on line 1 and the entity type that they've certified. So knowing who you're paying, really essential, and making sure you're going to get this right also. So you want to be on the lookout for flow-through accounts, and then also accounts that might be some sort of agent account. So if you're paying an agent for a writer who's written a book or things like that, to make sure you're actually identifying the underlying owner. So an audit alert. This is really important to make sure when you actually are in an IRS audit. So does your payee documentation support your reporting? When the IRS comes in to audit you, they're going to ask for your forms 1042 and 1042S, and then they're going to look at the underlying documentation that each of your vendors has provided or your payees has provided to document the fact that they are eligible for reduced rates of withholding. So you're going to make sure that the recipient agrees with the tax status you're listing on the Form 1042S. You want to make sure that the payees provided supports the treaty claim that's reported on Form 1042S. If the treaty claim relates to a vendor payment, you're going to need to make sure that U.S. PIN was certified on that W-8 VEN. It's not okay just to have it in your records if you don't have it on the actual tax form. You want to make sure that that VEN is valid. So if you've got everything filled out on the VEN, maybe they forgot to check an entity type in box 3 and they've given you the VEN and you've given them the treaty benefits and you've issued it on the 1042S, just because that one little piece of information is missing, the IRS will charge the full amount of tax withholding for that invalid tax form. So it's really important to make sure you have a document validation, certification, and process in place to make sure that they're actually correct in order to provide the treaty benefit to your payees. It's really easy for the IRS to check this out. Apparently they've hired a bunch of new auditors, and they issued an Internal Revenue Manual. They actually published it on the IRS website to say exactly the steps that the auditors should take to audit this, and it's pretty straightforward. And it's really low-hanging fruit, because if you go into a place who doesn't have a really robust validation procedure, you always find errors in the Forms W-8. So if you do get an audit letter, it's really important to go in and do some troubleshooting and maybe hire some specialists that can go in and tell you what you did wrong and try to remediate some of these. Luckily, the thing about the Forms W-8 is you can actually remediate them today and make certifications kind of to be retroactive, so that if you withheld a reduced rate of tax on a form that you issued last year and the payee can prove that they were eligible for that reduced rate with kind of signing some affidavit language at the bottom of a tax form, those things are curable. So it's really important to be aware of that and make sure that what your auditor is checking, you've checked first yourself. So moving on to the income code. Income code is box 1 of the Form 1042S. It's got to be a 2-digit number. So, and it also can't be 00. 00 isn't a specific income type that the IRS has listed in the instructions. So you should also be aware that certain income codes can only be paid to certain entities. So there's income codes that really only are specific to individuals. Scholarships or fellowship grants, compensation for personal services, always only paid to individuals. I see really frequently that those are provided to corporations who are providing services. Important to remember, personal services can only be provided by people. So that's it's always going to be when you have an individual as the recipient. Same as compensation with teaching, studying and training, or earnings as an artist or athlete. So you should be aware if you make a payment that seems as though it would fall under one of these descriptions and it's being made to a non-individual, the income code is generally going to be the other income code 50. So I see a lot where people are reporting personal services paid to a company. It's not correct, and it's really important to note at the beginning to look at when you're making the payment, you look at the treaty for that country, their country of residence, and make sure they actually do have a business profits article in the treaty where they provide a reduced rate of withholding, because a lot of times you're going to have a treaty benefit for personal services. It doesn't actually apply to business profits, and I see people get into a lot of trouble at the end of the year with that. So make sure you can determine the right income code on the Form 1042-S, and sometimes you need to look further than the actual payment. You need to look at the recipient to confirm that. Tax rate versus exemption code. So this is just, there's not a ton of black and white in the 1441 regulations, so whenever there is, I try to embrace it. Either the tax rate or the exemption code is always going to be 00. So the only time you put an exemption code in the exemption code box is when you have a tax rate of 0. If you have a 15% withholding rate, a 10% withholding rate, an 8% withholding rate, anything other than 0, your exemption code is going to be 00. It doesn't make any sense. You're giving them the benefit of the treaty, but the IRS only wants a rate in there, a code in there, if you're providing 0% withholding. Another thing I see all the time, probably is going to get issue a lot of notice. The IRS is probably going to issue a lot of notices about this in the coming years. So don't be the victim. Make sure you know unless your tax rate is 00, your exemption code is going to be 00. All right, the other issue is tax rate. It's a 4-digit code. It's not 0.30, it's not 10%, it's a 4-digit code. And if it's 0, it's going to be 00.00. There's only a handful of options for the 2007 filings, and probably you're just going to use either a 0%, 15%, 30%, maybe an 8 or 10 if you're paying some royalties, but it's limited and it's 4 digits, so don't put anything less in there. And boxes 7 and 9 must always be completed. It's going to be the federal tax withheld. 8 is actually withholding by other agents, probably not going to have that, or total withholding credit. But make sure you're either withholding tax or you're putting 0 in all of those boxes. 7 is the amount of tax that was actually withheld. Now this is kind of a sticky topic with the IRS, and I haven't been able to get a lot of direct answers from them on this. So box 7 should be the amount of tax that was actually withheld from the payee. This is their receipt for going to the IRS and claiming a refund if they're due one. So if you've just said, you paid them $1,000 and they should have been withheld 30%, but you actually withheld $400 from them, they need a receipt for that actual withholding if it's in your 1042 account in order to go back and get it out. So they're going to point out, the IRS has said they're going to point out math errors on Forms 1042-S. So if you say, you paid them $1,000 and you withheld it 30%, and you put $400 in that box 7, they're going to say, well, that's an error. But the important issue to note is that your payee needs a receipt for the actual withholding amount in order to go back and claim a refund. So that's pretty important to know. All right, tax rate versus income code in Recipients US 10. There's going to be certain tax rates that only apply to certain income codes. You can find all the treaty rates. It's really important. It's a really important resource. Pub 515, you can just query it on the IRS website and it'll pop up. Page 38 is where the tax tables start, and so when you're making payments to foreign people, that's where you would go to kind of note, what is the royalty rate for industrial royalties paid to a Canadian documented person. You'll find it all in Pub 515. It's actually a really great publication for all this information. I would highly recommend it. but there's many income types that require a U.S. TIN to claim a reduced rate of withholding under a tax treaty. So basically the standard rule is you need a U.S. TIN to claim a tax treaty. But there's a lot of exceptions. Well, there's a few exceptions that relate to a lot of payments that are generally made by banks. So dividends and interest, things like that from publicly traded securities, it's important to remember, rather than loans and interest on accounts receivable. Not required to have a TIN, but anything you make outside of those publicly traded financial securities payments is required to have a TIN if you're providing a reduced rate of treaty. So when you're reporting a reduced rate of withholding on certain types of income, you're going to need to have that TIN there. They're going to look straight to that TIN to make sure that you are complying. And that's a really big red flag. And I'm saying if you have a lot of errors like that, you're just prime target for an audit. They know that you're providing, you're making payments, you're providing treaty benefits, and you're not collecting TINs. They have that evidence. So that's a really easy audit target to find. On a side note, payments of ECI, if somebody gives you a Form W-8 ECI and they say the payments you're making to them are effectively connected, which is going to be income code 01, it's always going to require a TIN. It's kind of the same as a 1099 that always requires a U.S. taxpayer ID number unless you're back up withholding. However, there are certain presumption rules that would require you to presume income to be ECI, and you would report that without a TIN, and you would probably get a notice, and then you would say you use the presumption rules. Outside of, within the vendor payment rule, that's pretty rare though. So when you're making a payment of reduced rates withholding, just remember, put a TIN in there. If you make sure you collect a TIN and put it in the form. Make sure it's certified on your W-8 then, or ECI, and put it in the form. All right, exemption code versus recipient codes. There are certain exemption codes that can only be used with certain recipient codes. These are kind of rare, only when you're making payments. For the most part, these are financial services payments, QIs, withholding foreign partnerships. If you're making payments in a vendor payment capacity, you're not really dealing with this so much. So you should probably avoid those codes for the most part. And as a side note, which will affect you, don't use exemption code 04, the tax treaty code, remember, that we're going to use only when we have a 0% tax rate, unless the recipient's country code in box 16 is a country that has a tax treaty with the U.S. Another red flag that they will find and come and audit you. So make sure if you're saying that you're giving them tax treaty that they don't reside in Bermuda. All right, what if you can't file on time? Because we're getting this information perfect, we know we're not going to file it until it's perfect. We need to file an extension sometimes. When you're filing extensions for Forms 1042-S, you can't just stop at the IRS extension form that they've provided, because they also want you to provide a written request to extend the time to file Forms 1042-S to your recipients. So our request for an extension for the actual Form 1042-S, you're going to send that to the IRS on a Form 8809. It's going to extend the Form 1042-S filing by 30 days. The deadline for the 1042-S filing is March 15th. 30 days from March 15th is April 14th. It is not April 15th. Every year, for many years, I would smack myself on the head about April 12th and scurry and stay overnight at work for 2 nights to get everything else done because I thought I had an extra day and I did not. Learn from my mistakes. Now I know when anybody says, you know, file by April 15th, I hop all over them because I also would like them to get sleep towards the middle of April. So the 8809 doesn't require a reason for the extension. It's just automatic. If you want to extend by an additional 30 days, then you're going to need a really good reason. It's going to have to be signed by the filer if submitted by paper. You can file the form electronically using the FIRE system. If you have a lot of these, if you're filing on behalf of a lot of payors, you're going to need to file it electronically. And if you're requesting an extension from more than one filer, you can attach a list of the names and TINs of the additional filers to the 8809. But I believe if you're filing, if you're requesting an extension for more than 10, then you need to do it online. So don't attach an extension, or don't attach an appendix for that situation. Written requests are required for the 1042-S recipient copies, like I mentioned. There's not an IRS form for extending the time to file to recipients. So you send a letter to the IRS Computing Center in Martinsburg. You're going to include the requester's name, PIN, and address. Say, please extend me for 30 days. And again, that's automatic. You just need to write a letter. It doesn't need to say a lot, but you need to send it. How will the IRS know that you didn't send forms to recipients, you ask? They will not unless they come to audit you. But just in case, write the letter. All right, increased penalties. This is a big one, and this is a big reason why we're all here today. So the IRS had some standard penalties amounts that I'll tell you, I've been on some really big projects where failure to report was the last thing we were worried about. We were working on curing hundreds of thousands and millions of dollars of underwithholding, and the cap for the standard penalty was just the assumption that we were just going to, let's just pay that. I was not the filer in those situations. I was the consultant that came on, and that's just what was going to happen. So the IRS was concerned people weren't taking the reporting requirement seriously. Maybe $250,000 is a big deal to your institutions. It would be a really big deal to me, but for like a large financial services company, they just kind of didn't even sneeze at that. So the IRS decided to change things and make people really pay attention to information reporting. So it applies to late, incorrect, or missing forms 1042-S. Anything that's required to be filed after January 2011. So that's this year. Standard penalty, the maximum standard penalty, if you didn't correct it within a certain amount of time, was $50. It's $100 now, and they can impose that on the one that you failed to file to the IRS, and then the one that you failed to file to the recipient. I haven't seen them impose the one that was failure to file to the recipient, but it can be done. And since they're revisiting all these things, I'm thinking it might be done. The new cap is $1.5 million, so that's a much bigger deal than $250,000. The other thing that you want to look at is the intentional disregard. It's quite a big deal. If you know that you have an obligation to do information reporting and you don't do it, then you have some really big problems because there is no cap on that, and it's 10% of the amount that you failed to report. So even with a couple of forms, 1042-S, that you didn't report, that number can get really big really quick. So at all costs, you need to avoid intentional disregard. So pay attention, you in the back, sleeping. All right, correcting forms 1042-S. It is going to be inevitable that you're going to make a mistake at some point down the road on a form 1042-S. So you need to correct it as soon as possible because there are thresholds for when you correct things and what you get penalized for. When you're e-filing, you're going to have to make 2 forms 1042-S for certain errors, one to zero out the original file to correct, and others you just file one amended form. You want to go and look very specifically at Pub 1187, pages 8 and 9 for these instructions for when you're e-filing. So type 1 errors are you got the right person, you just made the wrong put in the wrong money amount, or you checked the wrong box, or you put in the wrong recipient code or something, exemption code, something like that. These just require you to change the messed up information into the correct information and file a new return. Type 2 errors are you didn't get the right person. So you have your recipient, you didn't put their TIN in there, so the IRS can't really attach it to a person. They have the wrong recipient name or the wrong address. When you make a mistake regarding the recipient, you have to enter that, to resubmit that form as amended and zero out the balances, so you never reported that original person in the first place, and then you want to issue an original form that is correct for that person. Again, you want to see the instructions in 1187 for that, because it can get pretty specific. All right, we're doing good on time here. We're on to the Forms 1042. So Form 1042 is actually a tax return. It's not an information return report. It's a bigger deal. So the U.S. withholding agent is required to issue a Form 1042 basically whenever you have to issue Forms 1042-F. So anytime a payment of U.S. source FDAP income is made to a non-U.S. person, you're going to have to issue the 1042. Again, whether or not tax was required to be withheld from the payments that were made, still going to have to issue the 1042. And it also acts as a summary of the Forms 1042-F filed. So it's going to say how many Forms 1042-F have you filed, and what was the gross income, and what was the withholding. And it's also going to provide them a schedule of your liabilities that occurred throughout the year. So you're going to need to be very careful about what you complete in lines 1 through 60. So the amounts that you list in this box are, they represent weekly accumulated amounts of tax that are required to be deposited with the IRS. So you're going to make payments to vendors throughout the year. When you make a payment to a vendor on, say, the 2nd of January, you're going to look at the Form 1042, and you're going to assign that, that payment a liability date. So say you made a payment on January 2nd and you owe $300 worth of withholding. That's the only payment that you owe withholding on between January 1st and 7th. You put that amount in the box on the 7th. So throughout the year, you're going to accumulate different amounts of withholding that were due according to when the payment was released to the vendor. Luckily, this works on a cash basis, so it's not when you owed the payment to them according to some contractual relationship. It's when the payment actually left your shop and went to their bank account. That's how you calculate the liabilities. And there's a few different ways to do this. What I would recommend, I've had clients that were compliant with every level of 1441 outside of making, we've gotten them all cleaned up, everything looks good. They keep on getting deposit notices for late deposits and penalized for that. So obviously after the first year or two, we couldn't write them any more excuses to get out of those penalties. So what I did was I had them send all of the withholding that was accumulating to a specific account that would be deposited to the IRS on like a bi-weekly basis, just to make sure that they would have all their obligations met for depositing on time. This is one of the easiest things for the IRS to ding you on, because they have your schedule of deposits. They have and you should also request a transcript from them that lists when the deposits were made. If you see any errors on that, you need to have them fix it. You will keep your receipts for when you made your deposits, and then you will send them in to them if they've got any sort of discrepancy on the transcript. I see discrepancies on transcripts all the time, so it's not an unusual thing that would happen. So you want to prepare, request your transcript when you're preparing, review the transcript, make sure it matches your deposits, because you're keeping that liability schedule for every week of the year that you made payments to NRA vendors that has some tax withheld. What they do when they get the Form 1042-S, they just run it through their system and they produce a penalty notice if you have any late deposits. So you're going to find the deposit schedule in the instructions to the 1042 of when you're required to make deposits. And I think we'll talk about that in a couple of slides. And they're just going to, issue you a notice and say you withheld these things late if they don't meet your deposit schedule. So the deposit schedule, there are specific deposit requirements. Like I said, you can find them in the instructions on the Form 1042, and you can find them in Hub 515. They must be made according to the schedule by quarter monthly period. So basically that just means weekly period. Liabilities over $2,000 must be deposited within 3 business days of the end of the period. Again, a period is a week. So if on a Friday you've paid vendors a certain amount and the withholding on those payments adds up to $2,000 or greater, by the next Wednesday you better have a deposit to the IRS. If it's more than $200 but less than $2,000, you need to make them within 15 days after the end of the month. And at the end of the calendar year, if the liability is less than $200, you can just pay it with your 1042 submission by March 15th of the year, or the extension for the 1042, because you want to make sure that that payment gets in by March 15th. So my recommendation to a lot of clients who have some really random deposits, so sometimes they go 3 months and they don't pay anybody, and then they make a massive royalty payment. They have $300,000 that they owe to the IRS, and they don't really have a procedure for making deposits because they don't really do them very often. Also, I see a lot of my clients who have kind of like a random, you know, maybe this week it was 200, next week it was 1,000, the next week it was 3,000, the next week it's 800, and I say just put yourself on a weekly schedule of making deposits, because those are painful penalties and they're senseless. If you're paying attention, if you just set up a procedure to answer that, then you can just make sure you get the deposits out. Or if you can make some sort of notification if the balance in that account gets high enough. It's really important to pay attention to that. Also, beginning January 1st of this year, all withholding taxes need to be deposited by EFTPS. So we can't use the deposit forms 8109 or 8109B any longer. Make sure you have a functioning EFTPS account that you can deposit these. I mean, I think most people use them for things like payroll taxes, but a lot of people enjoyed, if you were making a one-off deposit, going ahead and just using the paper forms. No longer available, not acceptable. They want the money electronically. If you can't use the EFTPS, you can get your bank to make a deposit directly to them if you're doing a one-off. Refunds and overpayments, also a sticky subject. So the instructions are clear. On Form 1042, you're allowed to claim a refund and say that you've made an overpayment on your taxes. Also, it might show that you owe a balance at the end of the year, so you will owe it to them immediately because interest has already started accruing on it as you breathe. So the instructions for refunds are clear, that a refund must be claimed on a timely filed return. There's no mention of including extensions, and there are some instructions on certain forms that say unless you file it on time, you're not going to get the money back. If you withheld, say, $1,000 from a vendor, you discover, you know, after the end of the year that you shouldn't have withheld on them. There's a point at which you can claim it back on the 1042, and then after that certain point, you're going to have them file a U.S. tax return to claim the overwithheld tax. And many of the people that you're issuing these forms to might not otherwise file a tax return. So it's a really big issue for them to go through the process of filing the U.S. tax return. So make sure if you have a refund to claim on your 1042, you're not extending your filing. There are examples of the IRS honoring the refund after the extension is granted. I've seen it done a number of times. It's just not reliable because it doesn't say that in the instructions. So I could see the argument that would occur if they refused to do that, but it's a problem. Refunds are generally not provided on amended returns. I've seen people file amended returns asking for refunds of withholding tax, and the IRS has pretty consistently denied those. The instructions are really clear on that. So what the issue is with the IRS, if you've issued somebody a Form 1042-X, you say you withheld $1,000, they come back to you and they say, hey, wait a minute, you were supposed to withhold $0. I was properly documented. Why did you withhold $1,000? Or you didn't pay them U.S. source income, but you erroneously thought that you did, and you issued that form to them reporting the amount. Well, now the money's with the IRS. The IRS is concerned that even if you issue them an amended Form 1042-S and say, oh, just kidding, I withheld $0, I want to give them their money back myself and claim it back from the IRS on a 1042, the IRS won't let you do that because they have that receipt of $1,000 of withholding being taken from this person. And they can go back and claim it from the IRS, and then you can go back and claim it from the IRS. And unless they put a system in place recently to track that, I don't think they have one. So that's what they're really concerned about. Once you issue the 1042-S to the person, they don't have any sort of information. They don't have any sort of information that will tell them that you've issued them an amended one, and they no longer get the money. So if you're claiming a refund on your 1042 and you don't have your 1042 prepared on time, you really have to make some strategic decisions as to how you're going to return over withholding to your payees. All right, so that is the end of the presentation, and we can move on to questions and answers. I think Neil has some things to discuss.
Yeah, great. Thank you so much, Jill. We really appreciate your expert view on 1042-S and the issues around it. Before we jump into the question and answer section of today's event, I'd like to introduce Neil Lefevre, who is the product manager for Convey Compliance. Neil, can you just take us through a brief explanation on how Convey can help?
Sure can. Thanks, Lauren, and thanks, Jill. Great presentation. So I just want to start off quickly talking about who Convey is for those of you who don't know. Convey is the industry leader in providing flexible, on-demand tax information reporting and withholding management solutions. We leverage our unique application of technology and over 25 years of proven experience to serve thousands of clients, including nearly half of the Fortune 500, with streamlined tax information reporting solutions. As an organization, we are solely dedicated to tax information. That's really all we do and where all of our focus and efforts are directed to. We offer a variety of products and services to not only help support the information reporting community, but also provide a lot of education, and I'll talk more about that in a second. So our TaxPort solution has full support for Form 1042-S as well as Form 1042, which Jill took us through earlier. We can help clients, or we do help clients, fully automate their 1042 and 1042-S reporting, everything from importing the data or loading all those payments, doing validations against those payments. So we heard Jill talk about things like you have to make sure that the tax rate matches what's in publication 1187, and the tax rate is associated with the proper exemption code. So those are all validations that our solution imposes on your data and alerts you of any discrepancies so you can fix those issues before issuing Form 1042-S. And also do things like help you produce 8809 so you get that appropriate April 14th extension on the forms, as Jill mentioned. So besides validating the data, we can help you print your actual tax statements and also help you with the withholding of the appropriate dollars and remittance of those dollars to the IRS. So beyond what we can do for 1042-S, we do support the 1099 series of forms, so forms like 1099 miss and interest that you may have obligations to fulfill, as well as Puerto Rico and Canadian reporting as well. And then we also have things like electronic statements, so we can help you put your 1099 series forms on the web and help you save some money on print by allowing your clients or vendors to download those forms versus doing print and mail. And then finally, the last thing I'd just like to mention is the education that we provide to our clients. So we pride ourselves in providing educational events like this one today with experts like Jill, as well as hosting annual user conferences. We just had our C2 Summit at the end of September, and we do have another one coming up. So if you like these types of sessions, we do 2.5 days filled with speakers presenting on various topics, including 1042-S and 1042. As well as we have 1099 News, which is our blog where we post information to help our clients stay ahead of the curve on upcoming changes like the increased penalties that are occurring this year. With that, I'll turn it back over to Lauren and Jill for some Q&A.
Great. Thank you, Neil. First and foremost, one of our most frequently asked questions is this recorded and will you be handing out the slides? And the answer to both is yes. We have recorded today's event, and I will be sending out an email to all participants in the next few days with access to the recorded version of the presentation and the slides. With that, Jill, we have a few questions for you. First question is there an IRS list of what the IRS considers a valid versus invalid tax form?
All right, so I'm going to assume that tax form means a Form W-8 and versus a 1042-S. And the answer to that is no, there's not. There are the instructions to the forms that will give you most of that information. And you can look at the IRM on the IRS website as well, and it will tell you what the auditors are supposed to look for. However, there are some things that have kind of been harped on by the IRS that aren't necessarily explained well enough in the instructions, things like capacity. The IRS mentions in the instructions that, it should have a valid capacity. It doesn't go into a ton of detail what a valid capacity for a signer is if you're dealing with somebody other than an individual payee. So my recommendation is that you really should be using a checklist or software to validate your tax forms, and you should be getting information or advice on that from some service provider who has a lot of experience with that. So they're out there. Checklists can be really cheap, really important. If you've got a lot of volume, I would recommend a software that would review it. I think there's a couple on the market. I know there's at least one on the market, but yeah, I would go that route because there's not really one good resource on the IRS website or from the IRS that is going to give you all the information that you need to catch all of the issues that would be coming through on a tax form.
Yeah, and just to add to that, the IRS, this is Neil, it's definitely a gray area on what's valid versus invalid, and kind of the approach we at Convey take with our taxport solution is we're going to compare what's going on the print form to what would be accepted by the IRS when you submit the transmittal, so making sure the required fields are filled out and the exemption codes are correct and all of that. So there are things that can get you very close to ensuring you have a valid tax form. And definitely a third-party tool can help you out with that process.
Great. Thanks, you guys. Next question. Has the IRS indicated when they will no longer accept the Affidavit of Unchanged status?
Last I heard on that, it was until we tell you otherwise, you can accept it. But sometime soon, they're going to tell us otherwise. But the ones that we've gotten until they tell us otherwise will be grandfathered in. So they're really trying to, they don't like it, they don't want to use it, but they're kind of bound to until they give us a better answer for it. So they're exploring other alternatives like trying to verify information on a third-party database like LexisNexis or things like that. But until they come up with a procedure for it, we're still allowed to use the Affidavit of Unchanged status.
Great. Next question. How do I know what treaty rates may apply if the income code is 50?
All right, so 50 is a reporting code that covers a number of different, that could cover a number of different income types. So you really need to start with exactly what type of income you're paying to your recipient. If it's business income, you go one way. If it's not business income, if it wouldn't be considered business profits, then it could be any number of kind of other things that you would be receiving. So you need to identify the type of income, specific character of the income that you're paying, and then review the treaty to see where in the treaty that income fits and whether it's covered by the treaty. And then at the end of the day, you need to determine the reporting code for it, but you really need to start with the specific character of the income, and then a number of different types of income are going to be coded as 50, and then you could prove to the IRS, yep, this was business profits under the treaty, and so that's why we approved the reduced rate. There is no necessarily like list of rates that the IRS has that would apply just to 50 because they're limited. 50 could cover a number of different things.
Okay, thank you. Next question. Can you choose to just withhold 30% and not allow the tax treaty reductions?
Yeah, you can, but you might have, that could be considered bad customer service. So you can always, the IRS does not punish you for over withholding. They're happy to take all the money you want to give them. And that you really don't have an obligation under the tax regulations to reduce that by treaty. I have worked at or done projects at foreign banks a bank in Bermuda specifically they're just not in the business of giving tax treaties because 95% of their customers didn't use them. For vendor payments, it gets a little bit dicey because you have contractual obligations to pay these people, and if it's not stated in the contract, then you might have some issues around just taking 30% of that payment. So under the tax regs, no problems, but under any other agreements that you would have with your payees, you might run into a problem if they're trying to give you a TIN and a valid certification, and you're not reducing the rate of withholding for them.
Sounds good. Next question. Why would some foreign entities have a U.S. TIN that does not begin with the numbers 98?
Oh, we see this. Not only have I seen foreign entities with TINs that don't begin with 98, I've seen U.S. entities that do have TINs that begin with 98. So 98 is a good indication that the person that you're dealing with is foreign, but it's not 100%. What happens to a TIN request once it goes into the IRS is not always 100% clear. For the most part, you get 98, and if you're getting a TIN that doesn't start with 98 from a vendor, you could have reason to question them about it, but it is absolutely conceivable and possible, and it has happened where they come out with something that isn't 98. I mean, potentially even when they filed for the TIN, they had nexus in the U.S. and then no longer did after that. So there's kind of a number of reasons it could happen. When it does happen, you can be skeptical of it, but there's no hard and fast rule that it's always 98. I've seen exceptions to that rule on a number of occasions.
Okay, this next one is a two-part question, so I'll start with part one. On the form W-8-BEN and form 8233, do we require an original signature on both forms from the recipient?
Okay, the answer to that is almost, I will tell you the one exception, well, there's two exceptions. Almost except for these two exceptions, the answer is unequivocally yes. You must get the original form W-8 or 8233. Yes. Now, the exceptions are if you're dealing with an intermediary and you have the underlying owners of a partnership and they give you copies of the forms with the IMY for the partnership, that would be okay. The other exception is digitally signed tax forms. So the digitally signed tax forms, you need an established system that you get an MOU from for the IRS. So that's only available for forms W-8 right now. They haven't extended that to other forms, or it's only really available for the W-8-BEN right now. They haven't quite extended that to the other forms yet. However, there has been some noise lately about this requirement for original forms. So the requirements listed in the preamble to the 1441 regs, but not found anywhere else in the 1441 regs, explicitly stating that you need original forms. So I think that's being challenged a little bit here and there by taxpayers, and I don't know that there's been any sort of decisive precedence for exactly the IRS winning a case that you needed original forms. I know they've imposed a lot of penalties on people who haven't collected them. So I would keep your ear to the ground on that one, because I sure am. And if it is they do set a precedent that you don't need original forms, and that would be a really big difference in a lot of the procedures that we see our clients using. So right now, yes, need the originals, but maybe not, because that's kind of a changing issue, potentially changing issue.
Interesting. And then the second part of this question is, if the Tax Treaty Benefits Part 2 section on W-8 Ben forms are not checked off, would that be valid documentation?
That's a valid document to certify foreign status. So you know that person wouldn't be caught up into the presumption rules. Maybe it's an individual. They would otherwise be presumed a U.S. person. So a W-8 Ben that does not have a completed Part 2, it's going to be valid for certifying foreign status, which just means if you're paying them U.S. source income, you're going to have to withhold at 30%. So unless you have, if you don't have Part 2 completed, you have pretty much no hope of reducing that withholding rate on the Form W-8 Ben to less than 30% for payments of U.S. source income.
Very good. Couple of more questions. Next question is, for foreign individuals that do not have a business in U.S. and do not have a U.S. TIN, do we need to continue to send them requests for their TIN year after year?
No, I mean, it's not that they're doing something incorrectly if they don't have a U.S. TIN. So there's plenty of people that we see that are, just making a few $100s a year in the U.S. They're getting paid honorariums, maybe a few thousand, and it's just not worth their time and effort to get a U.S. taxpayer ID number. It's just not something they're ever going to do. So you're totally fine and within your rights and compliance to make a payment to that person for 30% every year without even soliciting a TIN from them. There's just people that aren't going to do it. It's nothing. There's no problem with it, and there's adequate withholding and solutions to getting a form without a TIN built into the regs. So no, so if they give you a TIN or they give you a Ben, it's got no TIN, you have no obligation to follow up to request one on an annual basis in order to get one. If you're doing actually, so let me actually address that in a different angle. If you don't even have a Ben from them, and then you are treating them under the presumption rules as a U.S. person and reporting them and backup withholding on Form 1099, then you would still fall under that B-notice rule to request that from them. But generally, we can get out of that B-notice by just saying they're a foreign person and they were presumed U.S. So I would say if you don't have a Ben from them, then you should solicit the TIN. If you do have a Ben for them where they've certified foreign status, then you're done.
Sounds good. Last question for today. Do you have to issue a 1042 if the payment was made for services provided outside of the U.S.?
Okay, so good question. If it's not U.S. source income and the person is foreign, then no, you don't. And I always tell people documentation for under 1441 is a two-step process. First, you document the payment, because if you can document the payment as foreign source, you've got, market pollers in China who are doing phone polls to Chinese people about, their satisfaction with a certain product or something. That person's never going to come to the U.S. Then you don't even have to document. You don't even have to collect a document from that person at this time, because it's foreign source services income. They're not coming to the U.S. You would presume them a foreign person without even getting the tax form from them. So you're going to document that payment rather than even documenting the recipient, and you're going to be okay with that, and you're not going to have an obligation to do 1042-F reporting. So document the payment and then figure out what kind of documentation you need from the recipient.
Great. Well, thank you so much, Jill. For the attendees, thank you very much for joining us today. If you do have any additional questions for Jill, please note her contact information on the screen currently. And if you have any questions for Convey, about how we can help streamline any of your reporting processes or stay in compliance, you can visit us at convey.com or give us a call at 1-888-303-1099. And again, this event has been recorded and you will get an email from me in the next couple of days. With that, I'd like to say thank you and enjoy the rest of your day.
Thanks so much.
Great. Thank you, Jill.